I have Jeremy here with me today. And Jeremy, give us a little background about how, first of all, how you know CloudSpot, and then also what you do, what your business is, and all that.
Yeah, no, that's great. My name is Jeremy. It's great to meet you guys. I am the former head of customer support and customer marketing at CloudSpot. I was a CloudSpotter. If you are familiar with Adam, who pops up in the support chat, or any of the other support team members, that was my domain for a couple years. And since leaving CloudSpot, I've had the pleasure of co-founding a bookkeeping and virtual CFO accounting firm with a partner of mine. And so now I help small business owners understand what we call their financial story, which is kind of the narrative behind their finances, understanding how their finances impact their business as a whole, and how to make better decisions using all of that information. So, exactly the same as being a photographer, basically, is what that is.
And today we're going to talk about some of the not so pretty and fun things with photography, but things that are incredibly essential to running your photography business. I want to kind of dive in because I know you have a little presentation. So I'm going to let you kind of take it and go through that, teach us all about bookkeeping, because if our community is anything like me as a photographer, if there's one thing I try to avoid, it is all of those admin tasks, even though I know I should not avoid them. So I think this will be really beneficial to everyone today. And yeah, we're excited to learn from you. So I'm going to hand it over to you. I'm going to take myself off and give you the screen.
Cool. Sounds good. Well, what Logan said, you guys, you're not alone in that, Logan, in not understanding or not wanting to handle the finances, and not wanting to take a look at the numbers. That's super common, very, very typical, especially for small business owners. It makes it a lot easier to just run the business, or do what you're really good at, which is taking photos or making things for other people who have these treasured heirlooms, and not exactly accounting, not your forte maybe. But today what we're going to do is just kind of walk through the basics of accounting, basics of bookkeeping, and I'm going to give you just a brief overview of how that all works. But first, just so that you can know me a little bit better, as I said before, I'm the co-founder of Amarlo, which is a bookkeeping and virtual CFO accounting firm. I'm a friend and former CloudSpotter, and I used to run a photography business, if you can believe it or not. When I ran my photography business, I mainly focused on weddings. I got to do some beautiful weddings out here in Southern California. I also did a lot of music photography as well, and was a really big part of my formative years early on as a small business owner, doing music photography as well as portraiture. So I love being a photographer. I have a really big heart for those who are in the industry and running these types of small businesses. It's super, super important. So today, what we're going to do is we're going to talk about the way that most photographers approach their finances, and how we can make it a little bit easier on ourselves as small business owners. So what we found in the past is, dealing with many types of photographers, many types of small business owners, all across different industries, across different states. Some photographers are content. They're really happy with the work that they do, the money that they're making. They feel like it's enough. They have flexible schedules and the time that they need to get the things done that they really want to do. And others are really confident in the plans that they have to grow their studio, to bring on other associates, to take over the world, and they have this vision for the future that they'll do whatever it takes to make that into a reality. But there are too many photographers that fall into neither of these camps, neither being enough or having this vision for the future. We just kind of feel stuck in between. And that is super, super common with running a small business, especially a creative small business like a photography business. So what we found running an accounting firm is that there's something called your financial story. The information that your financials paint a picture and help you to unlock a narrative behind your business, to help you understand exactly what you need to do to achieve your goals, whether that's to create more time for yourself, whether that's to really grow your business, or to just spend more time with your family, whatever that might be. Understanding the financial story in your business is incredibly important to either fuel your growth or sustain your status. Most business owners either don't look at their finances or they simply don't understand them. We're not numbers people inherently when it comes to running a small business or being a photographer. But I think that we can fix that, or at least give a little bit of a better understanding of how the numbers in your small business should work. Let's dive in. So let's start first by defining exactly what accounting is and what bookkeeping is and why we need to look at these numbers in the first place. Accounting is the interpretation and the communication of financial information, right? So we have all of these numbers. Accounting is effectively the function by which we organize and understand what those numbers mean. And bookkeeping is the process of organizing all of that information together. So accounting and bookkeeping go hand in hand. They are extremely important parts of running a successful small business. Now, let's dive into the, real easy basics of accounting. Trust me, this is not going to be a crazy finance class. This is not going to be like, the college level course. I'm going to make it super easy for you guys by breaking these concepts down into a really easy theory that I've developed that I use to teach other people about accounting that I affectionately call bucket theory. So accountants use 5 buckets. And when we look at these buckets, they are the basis of every accounting system in the entire world. And no matter the size of your business, if you're making $10,000 a year to $10 billion a year, it doesn't matter. Accounting has 5 buckets. And within these buckets, each has a different function. And when we understand the function behind each of these buckets, it begins to help us to understand our business a little bit better and therefore be able to make better decisions, be able to achieve our goals easier, all by having a really basic understanding of what this information means. So let's start first with our first bucket. We have assets, then we have liabilities, we have equity, and we have income and expenses. Now, trust me, some of these words might sound familiar to you, but we're going to define each one at a very high level, very basic level, so that you know exactly what we're looking at when we're talking about accounting. Let's look first at our first 3 buckets: assets, liabilities, and equity. Our assets are any resource that is owned or controlled by a business or an economic entity. That's just a fancy way of saying an asset is what you own. It's something that you own. It could be a bank account, it could be a vehicle, it could be your home, for example. That is an asset. And then we have liabilities. A liability is going to be the future sacrifice of economic benefit that an entity is obligated to make. What does that mean? It means liabilities are something that you owe. It's money that you owe to someone else. And then we have equity. And this is the ownership of assets that may have debts or liabilities. And what does that mean effectively? It is what's left over, because accounting is just an equation. These 3 buckets make up the basis of our accounting equation. We have assets, what we own, minus our liabilities, which is what we owe, and that equals our equity, which is what's left over. Pretty simple, right? When we look at accounting financial statements, you might have heard of things like a profit and loss or a balance sheet. And it's really common if you've we've just gotten off of the end of tax season here. It's now May. Everybody's hopefully breathing a sigh of relief, or your bank account's recovering from the funds that you had to shell out. But when we're looking at our financial statements, these are often things that our tax preparer or someone else as an accountant are creating for us to be able to file with the relevant tax agency. But a balance sheet and a profit and loss, all these financial statements are actually really useful pieces of information that allow us to understand key components of our business. So, for example, a balance sheet combines these 3 buckets: our assets, our liabilities, and our equity. And a balance sheet shows us what we have, what we owe, and then what's left over. So if I have $10,000 in cash and I have $5,000 owed on a credit card, I have $5,000 left over in my business in equity. And oftentimes, this is a really useful indication for understanding where our business is currently at so that we can make better decisions about what we're going to do with the resources that we have. Let's take a quick look at the makeup of a balance sheet. Here we see at the top, it might be a little bit overwhelming, but we can highlight these three sections that we have within a balance sheet. So, for example, we have assets at the very top. There in the middle, we have liabilities. These are things like our credit cards, any loans that we have taken on in the business. And then we have equity, which is effectively what's left over in the business. Now, these three buckets are super, super useful, but you might be saying to yourself, okay, I have my bank accounts, I know what I owe on my credit cards, but where is all the individual expenses and income that I'm seeing in my business as I'm spending money or as I'm making money? And that is where we come into our next two buckets, our expenses and our income. Now, expenses are effectively a cost that a business incurs in running their operations. So, if you have money that you need to spend, whether you're buying gear, whether you're paying for your CloudSpot subscription, whatever it might be, that is an expense. It's money that you are spending in the course of your business's normal operation. And then we have income. We have the amount of money that a person or entity receives in exchange for goods. When someone pays me money, when someone gives me money for my shoot, when I sell photos or prints, anything of the sort that allows me to gain money, that's going to be income. And expenses and income are extremely useful measures for us to know exactly how much money we're actually making in our business and how much we're spending. Let's take a look at where we can see these two buckets. We're going to see these two buckets, expenses and income, show up on our profit and loss. A profit and loss, or a P&L, is just a document that shows us exactly what we've seen come into the business and what has gone out of the business. So what we've brought in terms of income and what we've spent to keep the business alive. Taking a look at our profit and loss, we have a really clear distinction here. At the very top, we'll see all of our income and our income streams, whether that's our mini session income, whether that's weddings or events, or any kind of in-person sales that we might be doing, or print sales. All of that information that we're seeing is going to be income, the money that we receive. And then we have expenses. We have things that we need to spend, money that we need to spend in order to actually run our business successfully. Things like our CloudSpot subscription, our marketing, any kind of gear purchases, any interest that we might be paying on credit card debt or loans, anything like that are all regular expenses that we incur in running our business. So, now that we know a little bit more about our five buckets, let me briefly touch on the fact that accountants use a double entry system. Now, this is a little bit difficult to think about, but I'm going to try and make it super easy. When something happens in a business, and it has to be recognized in two places to keep balance. So, at the top, we see that we have income and expenses, and at the bottom, we have assets, liabilities, and equity. And now what happens is that, for example, when income is received, I receive money. Uh, for example, you booked a huge wedding in Milan and you have collected a deposit. Congratulations. I hope that's an incredible trip. But both your bank account and your income have increased by the amount that you've made. See, your bank account goes up because you've received cash in the bank, and we get to report some income because you've received a deposit for your business. Now, those two things are directly related. And in our accounting system, we book an asset increase and an income increase in one entry, and that allows us to recognize that income that has been booked. When an expense is paid, for example, let's say you're hosting mini sessions and you had to pay a deposit on the venue that you're hosting the sessions at. Your bank account is reduced in value and your expenses go up. You spent money, so we have to recognize that you spent some money. And in order to do that, we have to reduce the amount of money that's currently in your bank account. Makes sense. Next, we see that when debt is paid off, we maybe we've had some excess cash and we decide to pay off credit card debt that's been hanging over us, and our bank account is effectively reduced because we've just spent a couple, dollars to pay down our credit card, but our liabilities, the money that we owe, are also reduced because we've paid it back a little bit. So understanding the connection between all of these different buckets is incredibly important when designing an accounting system. But really, it's important to understand in being able to track how your business is performing and what to do with your flourishing photography business. Using our profit and loss, looking at our income and our expenses, for example, we can understand how much money that we need to stay afloat. If we look at a P&L, for example, over the entirety of 2023, the entirety of last year, we can see exactly how much money that our business has spent. We know exactly how much we've spent in one year. We can even look at it on a per month basis to be able to understand what we're spending on in what months, where our busy season might be, where our slower seasons might be. But it allows us to understand the total expenses that it takes us to run the business itself, which then in turn allows us to understand how much money we need to make in order to sustain the business. So, for example, in this picture here, we can create goals for the future, or choose to simply maintain. When we look at our income on our P&L, we can see that in January we made $6,932 in total income. We've made in February $8,511, and in March we've made $8,273. If we are shooting for, let's say, maybe our goal this year is to hit $100,000 in sales in our photography business, we know that on average, we need to hit $8,476 for the rest of the year in order to hit that goal. But the only way that we can arrive at that number is by really tracking where our income is coming from and in what month, as that relates to all of the rest of our business in terms of our expenses and how we're building this business as a whole. And finally, using our P&L, our profit and loss, we can also take these figures, bring them to our accountant, our tax person, and say, hey, this is how much money I'm making this year. This is how much money I have in terms of income. Help me to calculate my tax liability, which I know is super difficult, especially as a photographer. If we're not staying on top of those numbers, if we're not really projecting out what we're going to make, it can feel like when it comes to tax time that those things are just a big hit to our business or to our bank account. But understanding exactly where our money is coming from, where it's going, and then what's left over at the end of the year or at the end of a quarter allows us to then more easily make projections for what we might owe in terms of taxes, which can ease that burden for us a little bit. So, in summary, tracking your finances through excellent accounting is what really fuels growth and reduces stress. When we look at the basics of accounting, when we look at understanding how much we have, what we owe, what's left over, where we're receiving money, and then where we're spending money, it allows us to be conscious of where that money is going and what's happening in our business. And it allows us to actually make more effective decisions and be a better business owner and to make plans for the future about how we might grow. And using all of that information, being conscious of where that money is going, really helps us to understand the story of our business as it's been told over the past few years or the past few months, and allows us to write a better story going forward, projecting out what we can do or what we might see in the future. And there are lots of great tools out there for us to use. I've personally, I've got some resources for you guys that I'm happy to have Logan pass along in our chat there. And I know that CloudSpot also just unveiled a sweet cost of doing business tool, which I have to shout out because it is a one thing that's very dear to my heart. Helps us to understand exactly what it costs us to maintain our photography businesses. Something that's very useful if we're trying to understand all of this information. But hopefully that gives us a little bit more of a picture of how accounting works at a very basic level in terms of our assets, our liabilities, our equity, our income, and our expenses, the relationship between all of those things, and the necessity for us to be understanding our books. That's just about my prepared presentation today. I know that Logan, if you have some questions that the community is looking to chat about, I'm more than happy to jump in and answer those things with you.
Yeah, so it looks like we've got two questions so far in the community. And if you're watching and you have questions, feel free to drop them in the comments right now so Jeremy can answer them. But the first question says, in your opinion, what is the best business structure for a photographer taking their side hustle into a full-time business? Sole proprietor, LLC, or S Corp?
That's a great question. What I'm going to say is that it depends, which is the most classic accounting answer that you can give. What really that conversation needs to be had with is actually a legal person. So understanding kind of the different entities that you have in your photography business, the things that you have available to you. When you're looking at a sole proprietorship versus an LLC, those things from an accounting perspective are effectively the same. There's a little bit of a difference between a sole proprietorship and an LLC in terms of a legal perspective. There's a bit more of a legal protection that you can get with an LLC, which I would definitely say is a big benefit. But it's always something when you're trying to make that decision as to what should I do in terms of my structure. I would absolutely always recommend to ask a lawyer. When you reach a certain level, obviously you can start doing things like your S corp election, paying yourself a salary, all those things to save a little bit on taxes. But those are always conversations that we want to have with a qualified professional who's able to ask you questions to be able to determine what the best thing is going to be for you specifically. So hopefully that's not too much of a non-answer and gives you a little bit more perspective.
All right, we've got another one too. It says, do you have a good bookkeeping workflow to stay on top of our financials?
I love that. That is a really excellent question. I do have a resource for you guys, Logan. I think I had sent you a link. If you are able to send that to the community, what we see when it comes to bookkeeping is that it's really about setting up your system to be as easy and manageable as possible. So what I would always recommend is hopping onto a platform, for example, like QuickBooks Online, and I have developed like a QuickBooks Quick Start for photographers specifically for you guys to be able to take a look at. That helps you kind of set up that environment so that bookkeeping is actually easy and manageable instead of something that you have to do, at the end of the year and it's a giant headache. What I would say is that leaning into that initial setup, really making sure that you have things dialed in terms of the accounts that you want to be using, connecting your bank accounts with QuickBooks or your accounting system to have a live feed of your transactions, and actually making the commitment to reconcile those bank account, book all those transactions, all the accounting work that you're doing every single month. And I say every month because what that allows us to do is to see how much we're spending, how much we're making, to really be conscious again of what's happening in our business. And it's incredibly important to do as a business owner, so that as we're seeing what we're spending, what we're bringing in, we're able to make good decisions about where we're headed, and so that nothing surprises us at the end of the year when it comes to tax time. So just being consistent, making sure that we are setting ourselves up for success in terms of designing that accounting system are really going to be the things that will go a long way.
It
I
says,
think
let me.
the one thing that I would advise, just as a quick takeaway for everyone who might be listening, if you're struggling thinking about accounting, if you're struggling thinking about how do I manage all of this, um, there are lots of really good tools out there. Again, I got to shout out the CloudSpot cost of doing business tool. It's a super, super good tool. And I would definitely recommend looking at that. But the biggest thing that I would say in terms of a takeaway for you guys is just to really be conscious about what's happening in your business. Because that's the biggest thing that happens in most small businesses, most photography businesses in general, is that we just choose not to look at the numbers because it's scary, it's complicated, it's difficult to understand. But if we can get past that mental barrier, really address exactly, the fear that we have over those numbers, or, the concern that we might not be as successful as we think we are, whatever it might be, it allows us to have so much less stress as a business owner. And it really allows you to focus on creating something, focus on, doing what you love to do, instead of having the fear in the back of your head. So just make sure that, when you're approaching accounting, when you're approaching anything financial, make a conscious effort to, be aware of what you're doing and where things are going, and what's happening in your business, because it'll make it so, so much easier for you in the long run.
2 more questions if you've got
Cool.
time.
Yeah, go ahead.
So it says, how do we figure out how much to pay ourselves and how much to save for taxes? Is there a simple formula to start with?
I love that. That is such a loaded question. It's so good. So, when it comes to how to pay yourself, it really honestly is going to depend on the structure of your business, how much money you're generating, all of these different things, all of these different factors. What I will say is that, when we look at entrepreneurs, especially, small business owners, micro business owners, people who are generally making less than $100,000 a year in their business, what the most common structure for paying oneself is understanding how much money we're bringing in and how much money we need to make in order for the business to survive. So on a monthly basis, our business is spending money. We have everything is a subscription nowadays. We have subscriptions that we are paying out of our ears, and so we need to know how much money we need to keep in the business bank account, to pay for our costs of doing business every single month. When we look at most business owners, most photographers in the industry, what the best practice is to have a kind of a nest egg in your business bank account, of somewhere between 3 to 6 months worth of those expenses, your monthly expenses. So if I know, for example, that I'm spending in my business, let's say $2,000, $3,000 a month, my goal in life, as a business owner, is now to have a $9,000 to $10,000 bank account balance, and to make sure that nothing allows me to dip below that bank balance. That I can then take that, the excess of that money out if I want to. I can do whatever I'd like to do with it. I can reinvest it into the business however I want to. But having that initial nest egg allows us to really keep track of what we need to make sure that the business keeps going, and allows us to, weather any slow seasons or any storms or anything like that. When it comes to taxes, what I will always suggest is to work with a tax professional to ask for help in that sense, and to ask for projections, quarterly tax payments, all those kinds of things based on your prior years doing business. So, if, for example, you made $75,000 in your business last year and you netted, let's say, $20,000, your tax bill is going to be, X amount, and your tax preparer can help you understand exactly how to handle that going forward, and how to pay for those, quarterly taxes, or whatever it might be. But it's always going to be wise to save a percentage of your income, usually somewhere between 30, 40% ish, depending on your situation. Again, you're always going to need to talk to a tax professional to determine what the best ratio is for you. But making sure that you have some savings every month, or pulling out some of that savings every month, in order to make sure that you can pay your tax bill at the end of the year, instead of just suffering with a giant bill due, as lots of people unfortunately do. So hopefully that answers the question a little bit.
All right, we've got another one
Cool.
that says, do you have a setup other than QuickBooks, maybe a free option?
I would say, in terms of accounting, if you're going to look for a free option, I think the best free option is Wave. Wave Accounting is a great one if you're looking for an actual accounting system. So I think you can do invoicing, accounting. It's great. Either it's free or it's very cheap. But QuickBooks Self-Employed, for example, is I think $15 per month, which is very, very cheap. And oftentimes, if you're working with an accountant, they'll cover it for you for free. But I would always say Wave is a really good option if you are needing an accounting system. Again, if you're looking to just understand what your business is spending every single month or what you need to make in order to run the business, I gotta say that CloudSpot cost of doing business tool is pretty sweet.
Where did that cost of doing business tool come from? Like the idea for it. Where did that come from, Jeremy?
I the reason that I love it so much is because I made it as a spreadsheet like 4 years ago, I want to say, and it was intended to be able to help photographers lay out exactly how much they're spending in their business in order to understand the monthly expenses, the yearly expenses, those kinds of things, to break down exactly what it takes for you to run a successful, sustainable business. And it's something that was born out of just, hey, this is a really good resource for people to get a conscious understanding of their business. And now it is beautiful. It's much better designed than I had it before in the very, it was in a spreadsheet before, and now I think it's a beautiful tool that has been redesigned by someone else. But would definitely recommend, using a spreadsheet of some kind or that tool to be able to track what's going on in the business.
We have one more question. It says, I think my biggest struggle as a business owner is categorizing our expenses. Does your QuickBooks Start Guide provide some suggestions?
That is a good question. So when it comes to categorizing your expenses, here's what I'm going to do. I'm going to drop a link into the chat. There you go. That is a link to our QuickBooks Quick Start Guide. And what is involved with that is what's called a custom chart of accounts. So in your accounting system, as we talked about, with all of those 5 buckets, we have assets, liabilities, equity, income, and expenses. Our accounting system is always going to behave based on those buckets. And when we create an accounting system, for example, like when we're using QuickBooks or when we're using Wave, for example, what those tools allow us to do is to define names for each of those buckets. So, for example, common expenses that we have in photography businesses, we have camera supplies, we have, some people are shooting film, we have lots of, venue rentals. If we're doing mini sessions, we have studio expenses, whatever it might be. And so what we've tried to do is to give a foundational basis for the expense categories that you can use as a photographer, where to book things like marketing, things like office supplies, things like your camera purchases, your equipment purchases, anything like that. When it comes to booking your expenses, a lot of people will kind of get caught up in the idea that we need to have a really granular, really specific, really drilled down accounting system to be able to track where I'm spending my money. And the reality is that when we can take a 1,000-foot view or 5,000-foot view of what's going on in our business with more general categories, it allows us to get a better idea of what's happening in the business as a whole. So what I would say my biggest piece of advice for categorizing is to think of things in bigger overarching categories. So we know that, for example, if I spend money on Facebook ads, that it's an expense. But what kind of expense is it? Well, it's a marketing expense, marketing and advertising. That's a great category for spending on Facebook ads. If I'm buying a sweet new Sony body for my photography, or a sweet lens, I can confidently put those items to, for example, camera supplies or camera and office supplies, those kinds of things are very common categories for photographers. But what we don't want to do is get really caught up in specific expenses. We want to keep things very general, keep things very easy for us to categorize, so that when we're doing the actual work of categorizing, it is much simpler, it is much easier, and it's way less time consuming, so because we only have to think about, from a very basic level, what that expense is. That's what I would say.
Awesome. I don't see any more questions coming in. There might be
Cool.
some as people rewatch the live, but thank you so much for chatting with us
course.
today. This is, again, something that, I think a lot of us try to avoid. And
Yeah.
like, I don't really want to know the numbers, but it is so essential to having a successful business, to
Totally.
knowing the ins and outs. So you broke it down in a wonderful way, and we're so thankful that we're able to join us and explain all of that.
Yeah, of course. Thank you guys for having me. Hopefully, this is a resource that'll live on forever that you can refer back to. Scrub back and watch me talk about buckets for a couple more minutes, and you can hopefully learn how to manage your accounting system a little bit better. But of course, if there is ever anything that you need, I'm in the community. If you want to tag me, just feel free to do that. If you have questions, I'm happy to pop up and answer questions or anything like that. But thank you guys, Logan, Gavin, even Adam, for the technical support, for for making sure that we can do this. Really means a lot to me, and I'm happy to be able to help out.
Yeah, thank you so much.
Thank you, guys.